Hello, everyone. My name is Youssef Sneifer, and welcome to our exciting panel, Fostering Compliant Innovation. I am thrilled today to be joined by three great panelists. Melissa Netram, Chief Innovation Officer and Director at the LabCFTC. Welcome, Melissa. Dave Dadoun, Managing Director, Global Regulatory Compliance, Worldwide Financial Services at Microsoft. Welcome, Dave. And Jerry Tsai, Head of America's Regulatory Practice at Stripe. Delighted to have you here, Jerry. I am so excited for us to have this panel. If our conversations before is any indication, it's going to be a little bit too exciting for some people. So let's get going. Let's jump right in, and I will frame it a little bit based on what I mentioned last time when we talked. A statement by the SEC Commissioner Hester Peirce that really hits at the topic that we are trying to address today, related to fostering compliant innovation. Commissioner Peirce said in one of her dissenting opinions, by failing to challenge ourselves to experiment with new approaches to regulation, we and those whose interests we are pledged to serve risk surrendering the fruits of innovation. At the heart of her comment is this kind of almost that equilibrium, or that kind of a pull between the effort to continue to foster innovation in technology, innovation in the business, and at the same time continue to foster a healthy, compliant environment that is protecting consumer, that is protecting the safety and soundness of our financial infrastructure, and kind of keeping bad people off of the system and off of that. It's an equilibrium that, frankly, I don't know whether anybody has gotten the right balance for, or the right measurement for, but it continues to pull us in different direction. Melissa, I want to start with you, but I'd love to hear Jerry and Dave comment on as well on that. If we understand, we accept the idea that there is an equilibrium that needs to be struck between compliance and innovation, where do you feel we are on that equilibrium? Are we off balance? Are we messing around? Because you hear a lot of people talk about uncertainty and predictability in our regulatory environment. Would love to hear your thought, Melissa. Where are we, do you think?
Yeah, so thanks for having me. For those of you who don't know the CFTC, it's the Commodity Futures Trading Commission. We regulate the derivatives market space. We're the sister government agency to the SEC. And so, as every government employee that I'm sure you've heard from throughout this conference has said, the views today are those of mine and not of my agency. So now let me get to the question itself. Where are we on this equilibrium, and are we balanced? And I would say the answer is not 100%, right? We aim for that balance, and I think we've come a far way than we have in the past. But unfortunately, innovation in tech move a lot faster than regulation. And so we as regulators do our best to try and foster that innovation in some type of environment. At the CFTC, we like to focus on principles-based regulation and highlight that, if you set the rules of the road and you ensure that that's an easy way or a good way for people to move forward, you're able to not only continue to protect the markets, which is what we have to do and what our true mission is, but also protect the investors and those who are investing in those marketplaces. We want to make sure that, principles-based regulation gives people the rules of the road so that you're not boxing in technology. Because once you start boxing in technology, as we all know, technology would probably be out of date by the time the regulation actually takes effect. And you don't want that when it comes to innovation and regulation. I would say at LabCFTC, which is the innovation arm of the CFTC, one of the things we try to do is bring innovation into the agency itself and into the regulatory process. So when I came on board last year, the chairman himself elevated us to an office reporting directly to him. And in doing so, his whole focus was to highlight that innovation is core to everything we do at CFTC. At senior staff, we are infusing innovation in each of the divisions, in each regulatory process that comes through. But on the flip side, at LabCFTC, because we have what we call our office hours, where we meet with innovators, we're bringing what we're hearing of what's coming down the pike back to senior staff, to others in the commission, to say, hey, this is coming, something we should be aware of.
I mean, Melissa, you hit on the whole idea. It seems like equilibrium will never be perfect balance. All of that. It's a work in progress, and every time we see innovation, it's going to continue to evolve, and it's going to need to be reestablished. Dave, your perspective on the equilibrium from a major technology platform, as you like to refer to it, as a startup. Tell us your perspective on where we are on the equilibrium.
Mm-hmm. So I would say that we're not fully balanced. I don't think it's really an either-or proposition in terms of regulation and innovation. However, I think it's a continuum, and part of that continuum is engagement with the full ecosystem and industry, both with regulators and with customers. And so if you compare where we were, say, 2 or 3 years ago, as far as both regulators and customers in terms of their knowledge base of cloud services and adoption of cloud services, we were much further down in terms of being off balance relative to where we are today. I think regulation itself is always going to have a challenge to keep pace with innovation and technology. At the same time, I think the CFTC's approach is really a model that I think can help advance things, because really it's that industry dialogue and engagement that's so critical, because both customers and regulators need to be educated on cloud, on technology and innovations. At the same time, we ourselves need to be educated from the industry so we can be certain that we are providing a set of cloud services from a risk management perspective that will enable institutions to meet their compliance regulatory obligations in terms of operating in a safe and sound manner. I think that work will continue. We'll never be in a place, candidly, where we will fully be meeting the expectations of customers, because those expectations will increase over time. At the same time, I think we're much further along today than we were 2 or 3 years ago. So I'm very optimistic about the path going forward, so long as we have these type of dialogues and engagement to move things forward.
Great. Jerry, as I shift to you, I would, obviously one idea is that if it is too off balance, where we are really, heavy-handed in terms of regulatory environment in which you are dealing with, it's going to hinder, innovators in the fintech space like Stripe. Again, to get your perspective on where we are in the equilibrium, and are you feeling better today about the equilibrium based on what Dave said than we did probably 2-3 years ago?
Sure. Thanks, Youssef. It's a great pleasure to have the chance to join this panel. So it's interesting. I was actually a regulator 2 to 3 years ago, so my perspective is a bit on both sides. I think that there has been definite improvement over the last number of years, especially in the field of understanding about sort of cloud. The agencies continue to bulk up and develop new offices in this space, develop existing staff, and recruit new talent as well. So I think there has been some improvement. My sense about sort of the biggest challenge in the regulatory innovation space is not just whether or not it's inflexible, but it's also, in the United States, the multiplicity of regulation that we have. That's part of the system. That's part of our federated system in this country. But it does present its own challenges. I think some greater efforts at coordination are going to be just as helpful as sort of loosening or tightening the rules. Just having differing rules can sometimes bring sort of a race to the bottom or a race to the top in terms of who has the strictest regulation, or just confusion for all the people. One thing I was actually very proud about when I was a regulator at the San Francisco Fed is we had a chance to work closely with LabCFTC, and we hosted office hours with them a number of years ago in San Francisco. So I think more events like that, greater cooperation among both the federal and the state's agencies is going to be key to this space.
So you are feeling better based on where you are.
Yeah.
You are feeling better, we are progressing, but you also teed off a little bit my second question to both of you, as if you read the questions for some reason. It is about, you talked about the US regulatory regime in there, and there are a lot of debates, as we know, Jerry, and this is, I want to start with you because I want to drill down on that question. You talked about the US regime, but there are a lot of people that start doing comparative analysis. Oh, Europe is so much more advanced in where they are in this on this fostering innovation, and we are so behind, and the effectiveness of one system in Singapore is so much better than Europe or US, etc. Just kind of based on what we hear overall, and I know Stripe is in Europe, in Asia, as well as in the US. Where are we as a US relative to other jurisdictions? Have we approached, kind of a, are we competing effectively to continue to bring in the innovation within our system, and also continue to balance it with the regulatory demands that we have? How are we doing, just in general, do you think?
Great. No, thanks, Youssef. It's a great question. I remember thinking about this and actually speaking about it a lot as a regulator too. My perspective is there is no one single right system of regulation and innovation. Every region, every jurisdiction is going to have its unique challenges and unique history. We can look at jurisdictions outside of the US and Asia or Europe and look at things that they have, be it open banking or fintech sandboxes are, very, very big in Europe. And we could maybe wish that we had more of that in the US or forms of that, but we also have to remember that the sort of unique structures that we have in the US, and as well as our own history. I think sandboxes are a great example because, they generally provide a path to licensing, a path to information from the supervisors. But when you think about sort of the number of institutions that we have in the United States, the number of banks and other depositories, the number of money transmitters, I think perhaps the path to licensing in the US has not been the same as it is in other jurisdictions, which might explain sort of why they have more sandboxes in those places. Which isn't to say that we don't have our own unique challenges here as well. I think the multiplicity of regulators, like I spoke about earlier, is one of those things that we have to deal with. So I'd like to see the US come up with, American solutions to American problems, and not just look at sort of international solutions that fit those specific jurisdictions and contexts. I think just on an empirical basis, while I know all of us can, anyone I'm sure at this conference can point at pain points in the regulatory system in the US, it's also hard to say that the fintech industry has not done well in the United States. It's clearly a big, robust industry. We have, you can look any given quarter, you see about like the billions of dollars that keep flowing into the industry. So there's always going to be room for improvement. There are things that we can do to improve, but I don't think we just need to look at other people's regulatory structures. It's time for us to address our own.
The grass is not always greener, obviously, and Dave, that's something we talked about, you and I, quite a bit. But it's also just kind of to throw. You're right, but if I hear some of the complaints that we talk about in the U.S., is that the regulatory system in the U.S. continues to, at least by the opinion of others, This is how I deflect the attention to me. Is that we are dealing with a very uncertain and sometimes unpredictable regulatory environment. Dave, compare and contrast. You deal with regulators all over the world. How do you compare? What's your sense where we are today in the U.S.?
So I think there's actually a dichotomy between the regulatory landscape and how that's translated in terms of adoption of cloud services by financial institutions. I actually think overall the regulatory landscape in its current structure is actually well defined. But how that's been translated in terms of how customers perceive that landscape has remained somewhat confusing, in part because, and I don't want to speak on behalf of regulators, but regulators will say, look, we have a set of principles, for example, within the FFIEC and an examination handbook that really gives a framework for customers to use to manage risk. That applies in a tech neutral way, whether it's cloud or traditional outsourcing. So there's actually no need to update that. And actually that works, except customers are actually looking, financial institutions are looking for more clarity. So if you contrast that, for example, in Europe, where the European Banking Authority, EIOPA on the insurance side, or ESMA on the security side, and then the UK and Bank of England with its own outsourcing paper, they've been very specific about providing more clarity in terms of what they expect from institutions in using cloud services and how to govern that. And the result of that is we see greater adoption of cloud services in those markets versus what we have seen in the US. Now, that will change over time. COVID itself has actually had a forcing function on financial institutions to think differently, to act differently, because the most important principle is continuity and operational resilience. And what happens is when they realize to enable those type of things, cloud actually offers them capabilities they did not necessarily have in their legacy environments. And regulators are clearly open to that, subject to one thing, that customers, financial institutions have appropriate governance in place. So I actually think the environment we're in today will actually fast forward things much more robustly. As Satya Nadella, our CEO, has said, we saw in the past 2 months as much cloud adoption as we normally would see in 2 years. And that will continue, I think, going forward. So I remain optimistic. I do think, going back to one of my Uber points, though, it does require engagement across. It's not just on the regulators, it's on the institutions themselves. And part of that is to ensure that they have the right people with the right know-how and skills to be able to manage cloud in an appropriate way. And if that doesn't happen, then those institutions will be behind relative to others.
Great. Melissa, I mean, you and I talked about a little bit, I'm trying to force you to compare apples to apples, but actually they are apples to probably watermelons. I don't know. But the idea is that how do you assess our progress relative to what you see, what you hear from other regulators in other regions?
Yeah, so, I think we have to take a step back a second and from a regulatory point of view, look at the fact that, all of the financial regulatory agencies right now have an innovation office or an innovation agenda where they're building out an office and looking for folks like myself to lead. And that just shows a commitment to innovation across the board. And that's not only at the federal level. There are a number of states that have also created innovation offices as well. We also coordinate very frequently with each other, either informally or formally, to share what we're learning, either from innovators that are coming through our doors or what we're dealing with. One of the organizations that has been developed actually by the UK is called the Global Financial Innovation Network. It is 50 plus regulators around the globe, including all of the US financial regulators, a number of states, in fact, that meet on a pretty regular basis and coordinate on financial innovation and what we're seeing and what else we have to be doing. So I would say we've come a long way. I want to agree with what Dave and Jerry have both said in terms of can we go further? Yeah, I think we can go further, but I think we've taken a big step in this approach. If you think back, I think one of the biggest challenges for fintech overall in the U.S. is not only which regulator do I go to, or I have to deal with the state regulator, and then I have to deal with this federal regulator maybe. But I think the other big problem sometimes is that sometimes laws and regulations are written at a time when we weren't even thinking about this technology. So think about Dodd-Frank, right, which is the most recent largest financial services regulatory reform package, was 10 years ago. 10 years ago, we weren't talking about digital assets and trading of Bitcoin and Ether and where that all goes. In fact, a number of the exchanges that do that weren't even around. And so I think it's important from an innovation point of view to not only look at it from a point of what technology is coming through our doors and helps in the challenges of regulation, but also which regulation needs to continue to be innovative to change to the ever-changing world. Just one other thing you mentioned, Dave mentioned, the pandemic, and I do think that the pandemic has helped regulators in a way that it's a tipping point, right? Regulators have to now also think about how do we regulate, how do we supervise, how do we enable an environment where all of our employees are working remotely, and so in that sense, technology and innovation, is something regulators have had to deal with firsthand, as well as thinking of it from a regulatory point of view. And between that and the innovation agenda that a number of regulators have, I do see, us moving further along. Are we where the UK and Singapore are? No, but they've had a couple of years on us to begin that and to build that up. But I think we're getting there. It's very hopeful.
You touched on a very important point as well that Dave mentioned. We talked about kind of evolving the regulatory environment. We talk about the laws. We always complain about laws need to change, need to catch up. But you said to me something so powerful when we talked last time that I want to drill down on a little bit. In engineering, they talk about an agile system of development where they keep talking about, if you want to fail fast. You develop, you iterate, you deploy. If it fails, you roll back, you do that. And that's a power of technology and of innovation. Unfortunately, regulators don't have the same opportunity, and explain that a little bit. And I know it's beyond it's obvious, but I thought that was brilliant example, Melissa. Can you talk a little bit about that? And Dave, I want your thoughts on that as we finish that as Melissa finishes her thoughts.
Yeah, I'm sure my colleagues on this panel can talk a little bit, and all of you at the conference can talk a little bit about how you launch a product. But I know from firsthand, from a prior job experience, it's you launch, you test, you fix again, you may kill the product, or you may go forward and try again, and you want to fail because you keep testing your theory. Is this really what we wanted it? Is this doing what we wanted it to do? In the government and regulatory world, we don't have the opportunity to do that. We can't just test and retest and fail. There's a lot of money that goes into it, a lot of resources, and a lot of things like laws that we have to abide by, procurement laws, even basic things such as like the Anti-Deficiency Act, things that have been around for actually almost 100 years sometimes, that are in place for a reason, that limit us in terms of the test and retest and fail environment. I know a number of regulatory agencies are building out reg tech type sandboxes. Jerry talked about sandboxes to try and enable something like that inside a regulatory agency. But for all of you who aren't familiar with the regulatory world, it's very difficult for us to just go and do something, or to bring something, a new tool, without having to commit to it. Part of that is because, especially at the CFTC, our whole role is to make sure that the markets continue to thrive and are vibrant, and investors continue to be protected. We don't want it to be, where we've tested, we failed, and oh no, we failed the entire market system, right? So there's that and that extreme, but there should be some type of a balance. And unfortunately, right now, the regulatory mindset is not as much in sync with an innovation mindset.
Yeah, Jerry, and I'm going to go back to Dave, but Jerry, on that note, you put both hats. You wore the hat of a regulator before, and now you are really kind of in a very innovative company who's really is doing some amazing stuff in there. But I want to go back to the conversation here. Are the laws as they are today requiring major revolution and evolution that is really transformative, or, as Dave said, and Melissa kind of talked about, in terms of the pace of that change, that the laws are actually adequate for what they are intended to do, and they need certain adaptation, but we are not here at the, waiting for the next revolutionary regulatory environment that needs to come up in here. What are your thoughts? How, that balance between evolution or revolution in the regulations?
Sure. No, thanks for that. It's a great question. I think I generally fall in on the evolution side of things. Maybe now that I'm with industry, I maybe a little faster evolution than perhaps I had wanted as a regulator. Although, I think it's funny. You can take any number of sort of fintech buzzwords, right? And when you have a bank examiner say something like "fail fast" or "run fast and break things" to a banker, that's they're going to have a sort of a different tone and resonance. And I think that sort of goes to one of the points that Melissa was making, which is, all of us in the industry recognize that regulators are also ultimately here to protect consumers and protect the financial system as well. There are times, and we know that innovation can bring great benefits to consumers as well, but we also know that there are risks. So, coming up with the way that has sort of that right balance of protecting consumers, protecting the financial system, while still encouraging the appropriate amount of risk that will move us forward is sort of the key. I don't think it's a revolutionary landscape. I think, Stripe is been a great company in this regard. We're not trying to, burn down the house and change everything about the financial system. We are working within the financial system. We are part of the financial system, the payments system. So I'm definitely on the evolution
and I know
side.
Dave wants to ruin everything and rebuild it. No, Dave, what I know you started this conversation by talking about the existing regulatory environment and the need to adapt it, really, rather than revolutionize it. Can you elaborate a little bit on that?
Sure. I think a few things. One, the reality is technology can be a great enabler to enable both regulators do their jobs effectively from a supervisory standpoint. By way of example, the FDIC chairman just had a challenge associated with building solutions to enable the FDIC to focus on community banks, in particular, to address questions of liquidity in a better way through use of AI models, by way of example. And you can translate that as well, for example, in lending scenarios and so forth, where technology can really be a key tool to help regulators, but equally customers. So, for example, if you take use cases for AML, anti-money laundering and fraud, right, where AI can be a terrific resource for institutions to use models that will detect potential scenarios in a more automated and candidly better way than traditional models. At the same time, what does that mean? It means, okay, well, we have to think and adapt to use of those models to address questions like intelligibility, explainability, and use of those models. Also, how to address questions around fairness and bias. Those aren't necessarily addressed in regulation, although certainly the CFPB will be very concerned in traditional frameworks about ensuring that lenders are not engaged in lending practices that would result in bias. So it's an adaptation to that, but the overall governance framework itself, I think the foundations and underpinnings of that can be leveraged from what exists today. But at the same time, going back to points I made earlier, what is needed is a level of clarity for institutions so they understand even that those existing frameworks can serve as a model. And so going back to what we've seen elsewhere in markets that have been very forward-looking in driving technology as a platform, whether it's in Singapore, Australia, UK, and so forth, it's giving that level of clarity to the marketplace that institutions are hungry for. And I think that can be very helpful. So what I would look in particular from US regulators is to give that level of clarity. So the FFIEC came out with a statement on cloud computing, I think back in the April timeframe. That's the exact type of thing that we'd be looking for on a going forward basis. And I certainly expect more when it comes to new innovations like AI and how that's used in the marketplace.
Great. We have 9 minutes left, and I want to run through very quickly that the three of you, and actually I told you that I'm gonna grant your wishes today. So if you have your wish list going forward, Jerry, what would it be around fostering compliant innovation?
Sorry, I was on mute. I think if the question was sort of our wish list about sort of what regulatory developments that we could see, my wish list would be sort of harmonization of vendor risk management guidelines among the agencies, improvements in digitization of regulatory financial reporting. And I'd love to sort of restart the conversation about sort of, non-bank access to central bank and other interbank payment systems. Those are my big three.
Mm-hmm. The interesting thing about it, I know that the acting controller of the OCC, Brian Brooks, is going to talk about the last part, I think, coming up next. So yeah, so that should be interesting. Dave, your wish list today.
Well, I'll pick up on that. I agree harmonization is important, certainly from the standpoint just even within the U.S., the complexity of the regulatory environment in the U.S. and driving harmonization across not just within members of the FFIEC, CFTC, but also think about state regulators. You've got 50 state regulators as well, and then you got 50 state regulators on the insurance side. So you have over 100 plus different regulatory bodies within the U.S. alone, and that complexity creates confusion. So I think driving consistency across, but then on top of that, having a broader set of discussion with regulators, at least within G20 markets. And so really driving a discussion with the Basel Supervision Committee, Financial Stability Board, I think that is critical. But then on top of that, it's industry discussion, industry engagement, using models like the CFTC has with its Office of Innovation is just terrific, and more of that. But then what I'd also like to see is how Melissa, do you and your team operate with the examiners on the supervisory side to actually influence or address how examiners approach use of cloud, because that needs to be translated as well. So I think there's a lot more that can be done. I'd also like to see examiner workshops with regulators. We've done some of that, but more can be done. I don't want to get too greedy. The list can go on. So I'll stop there, but certainly I think there's opportunity, and I'll just pick up on what Jerry said and fully agree with what he
said. Yeah, Melissa, I know you have, I think we're gonna stay here till tomorrow if we get you every wish you would like to have. You are on mute. Can you tell us your wish list?
Yeah, for the interest of time, I'll just hit my top wish, which is more resources. Most of you may or may not know, right? The government is limited with what we can spend and who we can attract talent from because of the appropriations that we receive. And so to have more resources to invest in more technology internally would be ideal. To also have an environment, where you can attract, a lot of really smart tech innovators to come and work for us would be great. The biggest challenge I think government agencies has is, honestly, our pay, right? And why would somebody out of school who's extremely bright and smart in terms of tech and innovation want to work for a government agency when they can go work for Microsoft or Stripe and probably make 2 or 3 times more than we can offer them? My response to that is because you're doing it for the good of the American public, and we would love to have you as part of our team to learn more from you. But unfortunately, that's not always the easiest answer, right? So I would just say top of the wish list is that. I'd echo what Dave and Jerry say as well. A lot of what we do and how regulators can help in terms of fostering responsible innovation is because of innovators and companies like Microsoft and Stripe and others. We only learn from you. And so as you're talking to regulators, or you want to talk to regulators, talk to them early, talk to them often. It's so important for us to be educated on what you're doing, as well as, in addition to the role that we can play to help you in that process.
Yeah, and it goes back to something that all of you mentioned is the dialogue, and the idea that around the same time is that knowledge transfer and knowledge sharing. In the absence, Melissa, as you said, of the fact that you need to upskill, you need resources, in the absence of people dumping millions on your on your lab to hire the best and the smartest and get the best system. In the meantime, collaboration, dialogue, continued collaboration with the industry and the regulators is such a critical step. I can go on and on, but I know that there are a couple questions on that have been posed, and I want to convey them to you, and you pick however you want to take it. One of the question that is being asked of us is, what are the challenges around regulating AI in fintech? It's an easy answer. Come on, who's gonna take it first?
Well, I'll start. I would say that there isn't much, if any, to date. So it goes back to the point about looking at what the existing frameworks are and work from that. I will say that certainly at Microsoft, we've been thinking hard to address questions about AI broadly, not specific to financial services, but certainly encompassing that. Really focusing on areas around bias and fairness and appropriate use of technology, and we've actually put together some pretty strong frameworks. And Youssef, you and I work together in terms of giving input, for example, to the French ACPR about how they should be thinking about it. And we've done that elsewhere with the Dutch National Bank, with APRA in Australia. So there's clearly opportunity to have ongoing dialogue. I think we're just really at the beginning of the discussion, and more can be done. But certainly, I think it's going at what I would call a reasonable. This is an example of where technology shouldn't get too far ahead, but should be implemented in an appropriate and thoughtful way. That might mean things aren't going quite as fast as people would like, but given the importance of the issues, I think that's appropriate.
Absolutely. Melissa and Jerry, as I turn to you to see if you have any thoughts on that, this question hits to the core of why we have this session, is that, the part of the title is regulating tech, fin or tech. And for me, it should never be about regulating technology. It should be about regulating the activities and the output of these activities, because it doesn't matter. Today it could be cloud, tomorrow is AI, some quantum computing 5 years from now. We can't continue to chase technology. We got to focus on the activity and adopt the principle-based kind of approach that Melissa, you started this conversation with.
Yeah, I mean, I can't agree more. We highlighted it throughout this conversation. Technology moves so much faster than regulation, and so we can't box that in. That's probably one of the challenges of regulating AI, or maybe a lot of regulators may be concerned about, is how do you make sure that you have the right principles in place, knowing that they continue to the technology itself continues to evolve. Yeah. I would say, in terms of advice to all of you, because regulation moves so fast, moves so slow. that was a wish. Because regulation moves so slow and technology moves so fast, in the absence of regulation, I know a number of companies, fintech startups, are often concerned, what do I do? And so, as Dave was talking about Microsoft building out its own principles, those are the things you should be thinking about. What are the principles, in the absence of regulation, what are the things you at your company or you and your startup should be thinking about? Because regulators will catch up eventually.
Yeah.
And when they come knocking, you don't want to say to them, I don't really know, I just kind of let it go. You want to say, no, actually, I have certain principles in place, and here's what we do to make sure that our customers are protected.
Okay, sorry. I'm been told we have to wrap it up. Jerry, sorry, didn't give you a chance. Thank you so much for all of you for a great conversation. It has been my pleasure. Thank you.
Thank you.
Thank you.
Thanks.